Hello everybody and welcome back to the channel. In today's video we're going to be taking a look at Novo Nordisk and we're going to see if it's a good investment to add to our portfolios. If you haven't heard of them, Novo Nordisk is a pharmaceutical company. As you can see here, they drive change in obesity. For over 25 years, they've pioneered research to improve the lives of people with obesity and promote long-term health, driving change to children, driving change to conquer stigma, pretty much anything that a pharmaceutical should work for in terms of being healthier, taking out whether it's medicines or some type of new innovation that will help combat some disease that humans or people have already. Now, as we just saw, the stock is down 49%, which is about $61 in the past year. One of the reasons for that is that they recently declared that they're going to change executive management. Usually when this happens in a company, especially with someone that had been in the company for 28 years, and out of those 7, he was executive vice president, usually there is some risk expected because no one knows what the new management is going to do. But that's not the only reason the stock is dropping. It's also because of some competition in the pharmaceutical industry and also with everything that's going on right now in the stock market. But as you can see, I mean, this is a huge company. It has a 213 billion market cap, a PE ratio of only 18, and an amazing dividend of 2.64. You guys know, if you've been in the channel for some time, I love dividend paying companies. We take a look at the 52-week low. I mean, we're $3 from there. It was $59. Now, as I'm recording of this video, the stock is currently at $59 and the 52-week high is $148. So in this video, we're going to take a look at some numbers. We're going to see the intrinsic value of this company to see if it will be a good idea to add to our portfolios. Now, let's take a look what Wall Street analysts are saying about this company. Out of a possible rating of 5, they have a 3.66. That consists of 12 total analysts in the last 90 days with 4 strong buys, 3 buys, 3 holds, 1 sell, and 1 strong sell. Now, if we take a quick look at the earnings forecast for Novo Nordisk, you can see that throughout 2024 and all of 2025, they're expected to beat their earnings year over year, which is very good for a company. That means there's probably growth. And also, if we take a look at the annual EPS estimate and the annual revenue estimate, we always want this to be increasing. It means that the company is increasing their numbers, they're making more sales. Hence, it will be a good idea to invest in a company like this, at least for me, but I'm not a financial advisor. Now, as you can see, the EPS is expected to go from 4.16 to 4.97, and the revenue for 52 billion to 61 billion. Okay, that's a lot of money. That's what, $9 billion in 1 year. That's not bad at all. Now, since we did notice that the company pays a good dividend, let's take a quick look at how reliable that dividend is. They have a 5-year growth streak. They have a 21.92% 5-year growth rate. That means that their dividend is going to grow at an average of 21.92% in 5 years. Payout ratio is 48, which is very good for such a huge company. I consider it to be low. Usually you want a payout ratio below 70%. Current dividend yield is 3.63, so more than we just saw because it's not updated. This is updated on the current market, which is an annual payout of $2.29, meaning you're going to get $2.29 per share that you own of this company throughout the year. Before we head into the intrinsic value, let's take a look at the current PE ratio compared to the EPS of the company compared to the stock price. Now, I don't know about you guys and how you guys invest in stocks. Again, I'm just like I said before, I'm not a financial advisor or anything like that. If you guys are interested, I do have a Patreon where I tell you guys when I buy stocks and which ones I buy in real time. That's in the link below if you want to check it out. But I mean, look at this company, okay? If we take a look at these charts, what are this telling us, right? This tells us that the EPS of the company has been increasing. Since this point on, the EPS of the company, the share price of the company has obviously been increasing, and the PE ratio has been increasing as well because people were willing to pay more for the company since they were making more earnings, right? Kind of makes sense. However, let's just compare this real quick, okay, to 2021. The PE ratio was 21.92, okay, higher than what it is now. The EPS was $1.45, earnings per share $1.45. We are currently at earnings per share of $3.28, basically double that. And not only that, at the time the share price was $32, and right now the share price is 62, so it means the share price is kind of doubled, but we do have double the earnings, but we're at a lower PE. So you could say we're pretty much at the same levels in terms of what you're paying for the company as in 2021. Yeah, you're paying less for it because you have a lower PE ratio. Yeah, they have more sales and they're expected to increase their sales more. I don't know if I managed to explain that very well, but if we compare it to, for example, June of 2024, the price of the stock was 139. The PE ratio was 48, which was extremely high, and the EPS was 292. So fast forward to the end of 2020. 2024, PE ratio was lower, more sales, stock price lower. I mean, like I said, I don't know about you guys. I'm not a financial advisor, but this is looking kind of juicy for me, especially with the stock paying a dividend. I understand that the stock is down right now, but if you are paying a dividend in the meantime that the stock is down, and the more it goes down, the higher the dividend percentage is going to go, because that's usually how it works. And you see that the stock has growth, as we just saw before. I mean, this is a little bit of a no-brainer for me, but again, I don't know, anything can happen. The market is changing constantly, so let's take a look at the intrinsic value of the stock. And keep in mind, guys, as with any stock, of course there's going to be some risk, but like I just said, that's with every single stock. So you got to take into account how much risk you want to expose yourself to, and decide whether if you want to buy the company or not. So let's take a look at this company and see if it has a good intrinsic value. You got to type in the ticker symbol NVO. Obviously this is not the earnings growth rate. We got to change this, so we got to go to Novo Nordisk future growth. And I always have misspelling when I do this kind of things. 13.3, not too far off from where we had it here. And as you can see, based on the intrinsic value, you have an upside of about 90% if the stock reaches $120, an upside of 69% if it reaches $106. And obviously with the revised analyst formula, which is the safest formula you could use in the world, I mean, these people, they have no margin for error, okay? It will still be overvalued, the stock. However, I think with this tool, with the updated Graham formula, especially this one, you should be good to go with that. So you can see we're currently at $59. I do like to buy my stocks with a margin of safety. That means it gives me room to be wrong. And even with a margin of safety, I could be buying this stock at $69 and it's currently at $59. To be completely transparent with you guys, I did open up a very, very small position, very, very, very small yesterday at around the $62 mark, $63 mark, which I did post on the Patreon that I was talking about before. Link in the description. If you want to know more about that, please go over there, support the channel if you don't mind. I really appreciate it. And if you enjoyed the video, consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next video.